Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Sunday for Sunday, October 17th, 2021. We've got another great show for you this week. I'm going to be joined by members of the media, academia, and financial services as we analyze all the news in retirement markets, technology, personal finance, so much more. So sit back, relax, enjoy this episode of BRN Sunday. We're going to kick things off with a look at some developing news out of Washington, D.C. And joining me on the line to bring us up to date on what's happening there are the Legal Eagles. We know them as well as David Levine, Kevin Walsh. Both are principals with Groom Law Group, an employee benefits law firm based in good old Washington, D.C. Gentlemen, great to talk to you. Thanks so much for joining us on the program this morning.
Thanks as always, Jeff. It's good to be here. I'm really here to focus on, social governance, other types of things today, because nothing sounds more fun on a Friday morning or Saturday morning, as the case may be, as that. But I know Kevin has a lot of thoughts on this. Kevin, anything new?
Well, I mean, finally, I think we vamped for a month solid on, there's ESG rules pending, there's ESG rules coming. We've been talking about it since August when they were sent to the White House for review. And the exciting news is that as of October 14th, we have new proposed rules that have been published in the Federal Register, which, if you look at the press release, they say they overhaul essentially the framework for considering ESG or the rules around proxy voting. If you dig into them, they make some changes to the documentation requirements, but they're largely consistent with the framework that the Labor Department's been applying for the last 25 years. And so I'll quickly, jump into these. Mm-hmm. And I mean, to me, the big takeaway here is that they remind plan fiduciaries that, you're welcome to take, factors into account, whatever those factors may be. And, we typically focus on the ES and G factors, but they don't come out and say it has to be an ES or G factor. And you can take those factors into account so long as you don't sacrifice returns or increase risk. And they note that, in here, this is a little bit of color that the Biden administration's adding. They note that for long-term investors, global warming really could be a long-term financial threat or a material risk. And, it does that for two reasons. One is that, consumers may move away from those types of products. And also they highlight that there's an increased government regulatory risk, which could dampen returns. So, I mean, the key here is that, if you're a plan fiduciary, you can take these factors into account so long as you're not, sacrificing return or taking on additional risk. And it's relatively consistent with the prior administration in terms of the framework. Now, here's kind of the sea change departure. The sea change departure is the Trump administration, their rulemaking had said, that's the rule, but if you're going to take these factors into account and you have determined that they're not going to have a material economic impact, so if you're going to take an E factor into account, so global warming into account, and for whatever reason your committee thinks that, we want to take global warming into account, but we also think that global warming is not economically material. The Trump administration had said, plan fiduciaries, you need to document that you're doing this, and you've got to document why you were doing it. The Biden administration, they're getting rid of the documentation requirement when you're taking extraneous factors into account because they're not going to have an impact. The other area where there's a big change, and this is probably the one that's going to get the most attention in the long run, is it permits consideration of funds that highlight their ES or G focus or consideration. They allow funds that do that to serve as default investment alternatives. So the Trump administration come out with special rules for default investment alternatives. And the Biden administration is saying, the regular standards of prudence and loyalty, the regular rules that we apply where we require fiduciaries to act prudently and solely in the interest of participants and beneficiaries, they apply for investments more broadly and generally. David, do you have any color you want to add here, or should I pivot into a really quick proxy voting summary?
I'll add a little color. I think, Kevin, your second point is really the bigger one. There's a lot of questions after the Trump administration version of this about the special rules for ESG. And as you highlight, this sort of goes back to saying there is one standard set of rules. And that is something that was raising a lot of questions. And I think that's something that will be well received. As an example, already you saw it yesterday afternoon today, and a promotion like announcing an ESG focused path, where of course they will focus on investment performance and everything. But there was an announcement about that already. So you can see where things could easily move very quickly in light of the new guidance. Kevin, you want to go back to proxy voting?
Yeah, so proxy voting, it's an area which has gotten a little bit less attention, but it's still a bit of a hot topic. The Trump administration in rulemaking had essentially reminded plan fiduciaries that, proxy voting is a fiduciary function. But they had, reminded them also that not every proxy vote is going to have a material economic impact. And that, if a proxy vote's not going to have a material economic impact, if it's not going to get participants closer to a secure retirement, then it cautioned plan fiduciaries, in those circumstances, you're probably better off not voting in proxies. And DOL went a little bit more of a thumb on the scale, and they provided a couple of safe harbors where plan fiduciaries could have a policy that said something like, we won't vote proxies unless we own more than 5% of the shares of a company, or we won't vote proxies unless it's a material event for the company, like a merger or an acquisition, or even, we will vote proxies, but we're just always going to vote them with management. The Biden team, in their new proposed rule, has come out and said, those safe harbors, they seem to go a little too far. They agree with the Trump administration voting proxies is a fiduciary function. But their color on this is that they think the safe harbors went too far, and they want to remind fiduciaries, you don't always have to vote proxies, but in general, the Biden team seems to think that proxy voting has more of an economic impact. So it's again nuanced where they're putting a thumb. They thought the Trump administration put a thumb against voting proxies, and they're trying to take that thumb off. Now it's unclear if they're going too far and putting a thumb on the other way, but this is the tension we see around rights that are pertinent to shareholders.
Well,
I hear the birds singing, David. Do you hear the bird? When Kevin said that, the birds just chimed.
Well,
they must be excited.
They're excited about their environmental policies being voted on. But there is one tidbit here that I think that did jump out at me. The Department of Labor talks about a little bit of how proxy voting can tie into an investment policy statement, where I have a little pause, and I understand the different administrations change. I have some pause on this because I worry that there's different schools of thought out there as to what you need in an IPS. I know my personal view is an IPS can be very flexible, and there is no rule saying you need to have a 20, 30-page IPS. And similarly, there's nothing out there in ERISA, the statute, that says you must have a policy for X and Y. And sometimes policies for policy's sake can go too far. And I would hope in the final regulation, the DOL, I understand their position, but recognizes that it's about a prudent process, and it's not about having a policy for this and a policy for that, because eventually you have a giant stack of paper and it's almost a gotcha, and it shouldn't have to be this way. Good governance is process. Good governance is not a laundry list, and that's my take.
And David, that's a great comment. And just a reminder for listeners, the comment deadline is going to be December 13th.
There you go. 60 days from the 14th, right? That's 60 days, I think. And then we will get, I guess they'll take all those comments in and eventually produce a final rule that will take into account all the comments, right, guys?
Exactly.
That's what they're supposed to do.
Yeah, I'm learning. I think I'm learning the federal regulatory schema.
Well, Jeff, next time we're going to have a whole discussion of interim final rules and how they work under the Administrative Procedures Act. I'm thinking you'll put us in the Z block. We'll be great.
I mean, I think David's preparing a Schoolhouse Rock on how regulations get made in various forms.
Kevin, I was
just a
going to talk about how you find a missing participant in 8,000 simple steps.
8,000. All right, gentlemen, we're going to have to leave it there. Thank you so much for joining us, breaking down these proposed rules. And look, we're going to have to see how things evolve over the next 60 days. Have a great rest of your weekend. We'll talk to you again very soon.
Thank you, Jeff.
Thanks, Jeff. It's always good being on the program. Thanks, listeners.
See you guys. Bye-bye. Welcome back, and now we're going to talk a little technology and consumer products. And I think this time we're going to talk more towards the healthcare arena. Joining us on the line, he's a lead advisor, executive producer for Seven Investing. We're talking about Daniel Klein. Dan, thanks so much for joining us on the program this morning.
Thanks for having me, Jeff.
So Dan, you cover technology, you cover a lot of different areas. This one is really interesting because Apple, our friends at Apple, not really friends, but the Apple company is doing a lot in the healthcare arena, especially around delivering care. But they're also exploring whether or not their AirPods, and those are their ear listening devices, can take your temperature and monitor your posture. And I'm really interested about the latter, not the former. But give us your take on this.
Well, the question is, how is it being used? Mm-hmm. Because we all know that temperature has become like a gauge for health.
Yeah.
And I don't know if you've walked into places where they take your temperature, mm-hmm. but it's pretty routine here. And here's the problem. Taking your temperature as a healthcare basic level of screening to decide if you maybe need more screening is perhaps useful, but probably not. But let's pretend, okay, most people just get more comprehensive screening, and that rules out that they're sick. I just went on a cruise, and they do not take your temperature when you get in a cruise, but they ask you a lot of questions, and there is a lot of health screening. So in theory, if I said, yes, my stomach didn't feel great this morning, they could then send me over to a doctor who could determine, like, oh, he had a breakfast burrito, he does not have COVID, or whatever else it might be. But if my AirPods are taking my temperature, I'm not entirely sure I want my AirPods to be able to report to, I don't know, the airline I'm about to get on that my temperature was 98.8 and that maybe they should screen me more. So I do think there's like really useful information here because obviously, Jeff, if you're, you know your temperature as well as anybody. I run about a degree low as my normal temperature. So if I'm running like a 99, I'd want to be aware of that and monitor it. But I want to be aware of it and monitor it or choose to share it with my doctor mm-hmm. or choose to, not go in a public place. And I worry about the gray area. Like if you knew your temperature was marginally high and you chose to go into the grocery store, is there liability there? Like, I just think there's a lot of really great tools coming out for health monitoring. And, I wear a Fitbit. I have the new Fitbit Charge. It's like my 19th different watch that I've tried. And the data is really good. But I'm not really sure I want that data, my personal data, used by other people. Now, on an aggregate level, I'm all in favor of that because you can use aggregate data to find, like, wait a minute, a lot of people near Jeff get this particular disease, and that's public good benefit. I'm sorry to pick.
That's a headache. My wife will tell you that's a headache, Dan.
Sorry to pick something morbid, but they might find that, geez, the people who live in this part of Michigan, they don't process oxygen as well. Oh, wait, there's something in the air. We can fix that. There's a lot of great that can come out of sharing data. Apple's doing some really amazing projects with aggregate data. But personal data and then the posture part of it, I don't know. Like, do I need my mother following me around telling me I'm slouching? Like, it just that just seems like a little nudgy. But I think the point of all this is where in the next few years, we're going to get a lot more really useful, really valuable health data. And I think a lot of what we have right now has bordered on the novelty. Like what your watch can tell you is useful to a point, but like my watch cannot detect my weight training workout because it's not super heart intensive. But believe me, I'm sweating, the muscles are working, I have to input it, and in my opinion, it undercredits me. So that stuff has to get figured out. But I think we're seeing it. I think we're getting there. And when something as basic as your headphones can take your temperature, can know what your posture is, that's sort of the tip of where we're going. And we've talked a lot about you can monitor hearts, you can eventually check people's blood sugar, check whether they're dehydrated. I'm really excited for this, but I do think these companies need to tread carefully.
I agree with you on that, and I'm just wondering how it does it. Did you read about how it detects your posture? Because as you're talking about posture, I'm actually sitting up more straight, so that I'm not slouching. I mean, how does it do that? Is some kind of servo in the pod?
They don't explain it, and I can't imagine early generations of this are going to work that well because if I do a very vocal show, and Jeff, we've done video together. You see, I move around a lot.
Yep.
I'll get
Those
credited
hands.
for
Those
yeah.
hands.
I'll get credited for steps. So my watch doesn't know because it's moving that I'm vocally sitting and waving my hands or shaking my papers dramatically or whatever it is I'm doing on camera. And I'm not sure it's not going to get faked out when it comes to posture as well. So again, I don't think any of these things are going to be all that useful in 2021, 2022. But I think where we're pointing towards in 2025 is very Star Trek. It's very like if you choose to wear something, you're going to wake up in the morning and it's going to tell you like, Jeff, you need a little extra protein. Your vitamin D is low. Your potassium's not great. Maybe have a smoothie with a banana in it. Like, I really feel like we're heading towards much more personalized digital healthcare. And other than the fact that, I've talked about this, that all that information can scare you. Like when I first started watching my like heart rate, I would be like, wait, why is my heart beating at like 101? It's like, oh wait, I just ate a chicken wing. It was spicy. Like spicy causes your heart rate to go up.
Mm-hmm.
It was almost too much information, paralysis by analysis. But I do think we're starting to get better detailed pictures. I monitor my sleep. Now, I was on a cruise for the last 4 days. I'm afraid to look at it because I don't think I slept 8 hours in 4 days. But normally, I check to see, did I have a good night's sleep? Am I rested? Should I take it easy today? And it's not always accurate, but it is generally a useful tool. So I'm very excited about the future of this, but not so much the present of it.
Dan, you go to the doctor probably on a presumably a regular basis. What does he or she do with the data that do you bring a printout of everything that's in your Fitbit or your Apple Watch or your nutritional calendar?
So my general practitioner, no. Though I do share some like overviews. Like, yes, my resting heart rate has gone down by 10 beats, but I have done some teledoc appointments. And I think this is one of the cool things about having included, because it's very hard to get an appointment with your regular doctor. And I've actually done teledoc appointments where I've just talked about, okay, I'm really looking to achieve this result. I want my heart rate to go down through exercise, not medicine, which is heart rate isn't blood pressure, but they're related. And now for a copay, or in my case, I get a certain amount included, you can do that. So with those people, yeah, I've shared my workout data. I've shared, and it's almost like a doctor who's acting partially as physical therapist, partially as a personal trainer, where you could say, this is what I'm doing. What else should I be doing? And so, yes, in some cases, I've shared it very aggressively. But in terms of like your routine annual physical where they take like blood work, I don't think they care that much what my Apple Watch has to say.
I want to shift gears a little bit, Dan, and get your reaction. Bill Shatner, Captain Kirk, for those of you who remember the original Star Trek cast and series, recently, just this week, I think, reached the stars and officially, not on the Enterprise, but on Blue Origin. I wanted to get your reaction to that news.
Yeah, so it's really exciting. And I actually fly in the face of Prince William. I don't know if you saw what Prince William said. He basically said all these billionaires should stop focusing on space and solve the problems on Earth. And as a reader of science fiction, if we do not go to space, we will all die here on Earth. Maybe not today, maybe not tomorrow, but eventually. It's like retail. If you stop expanding, you're dying. And I do think we are, in our lifetime, going to see people on Mars. We are going to go see the Moon Hotel or the Space Cruise or whatever it may be. And some of that is novelty and some of it is fun. But someday when we're mining asteroids for, rare metals or gases or things or new sources of fuel or whatever it might be, that started with the novelty of sending Captain Kirk to space, and it's pretend space for 17 minutes of sort of weightlessness. So it all seems like a novelty, but it's building towards something. And from a practical point of view, launching a satellite is much cheaper. Our ability to clean up space, all the satellites we launch that don't work anymore, that's a lot less expensive. And things like if I want to go to Australia and have it only take an hour and a half instead of 18 hours, that's within reach. Like you could do that with suborbital flights. Mm-hmm. So in the next 10 years, like I would argue that even at our age, we are likely to really benefit from some of these things. So do I think it's important that we send Captain Kirk to space? No, but it brings a lot of attention. Now, has that attention been good? No, I think a lot of the coverage, because Jeff Bezos and Elon Musk, who are leading SpaceX and Blue Origin separately, because those people are so polarizing, it's sort of detracted from the mission. But the goal of Blue Origin is to figure out how to colonize Mars and to give humanity its next frontier. And look, I think that's really important. We've neglected space since, the 80s, the 90s. When did the space shuttle stop flying? It's something as a country that I think we've really shown that private industry can really, really do well if you unleash them on a problem that obviously has some cool business implications.
And which one is Prince William again? Is he the goofy tall one?
Yeah, he's the next, the next king of England. He's after Prince Charles.
Yeah.
And honestly, I don't know that there will be a king of England at that point, but that is a controversy for another day.
Yeah, absolutely. Well, Dan Klein, always a pleasure chatting with you, and I like the fact that we can talk about Captain Kirk and AirPods in the same conversation. Have a great rest of your week, and welcome back from your cruise, and we look forward to having you back on again next week, my friend.
I'll see you next week, Jeff.
Bye-bye. Welcome back. We're going to close out the show by talking a little bit about what the stock market, what the economy did this week. And joining us on the line, he's the guy to break it down. He does all week long on the TD Ameritrade Network, Morning Trade Live and Markets on the Close. I'm talking about Oliver Rennick. Oliver, how are you doing, my friend?
Doing well. Just looking at an equity market turning bullish.
Yeah, so break it down for us. I mean, every time I turn around, it's another quote-unquote warning sign, but it seems to me, as the lay guy here, that things have, this economy keeps on plugging along regardless of a debt ceiling extension or not, or a reconciliation bill, or, inflation.
The data, indeed, this week was pretty solid as we got the jobless rate coming in lower than expected. That was good. We saw retail sales coming ahead of expectations on Friday. A lot of really good things that you like to see that show a strong, firm economy. Then, most importantly, we had an inflation print that, while very elevated on an annual basis and warmer than expected on a month-over-month basis, did not sink the market. In fact, it did the opposite. The big event of the week here is the NASDAQ taking off like a bottle rocket after Wednesday's consumer price index data hit. And there was a first reaction that seemed like the market was worried about it, and then that entirely reversed. And now we've had about 3 days, depending on how the market closes Friday, of real renewed bullish behavior. And that is a very big deal because it suggests maybe that the markets now have priced in the level of inflation we're dealing with, and that potentially this move this week is telling us that inflation is not going to be as big of a problem that some are worried about. But it's a couple days of action, and the trend since September has been one of higher yields and a bond market getting ready for tapering from the Fed, and those trends have not reversed yet. So we really need to respect the charts here. As bullish as a lot of things look right now, there is still some confirmation to be had, and you really have to see some trends turn around, I think, before you have a lot of renewed confidence in the market.
Oh, it's been a while since I've used fireworks, but don't bottle rockets explode, Oliver?
That's true. They go pretty high up now.
Okay.
We're up to were we up 4% in the last 3 days?
Yeah, it's unbelievable. Let me ask you about energy prices. Any concern from the market? I know we've seen oil prices on the rise, but just we're heading into the fall. We're in the fall and heading into the winter. Heating, if you live in an area of the country that needs heat, energy. Any concerns about that maybe dampening some of this good vibe that we're feeling? And a lot of people use natural gas, use oil to heat their homes.
Yes, the crude oil move and the commodity move in the energy space has been a very big story. It's one of the trends that is still very intact, that is inflationary. So fitting into the point I was just making there is we have crude cruising past $82 now, and the highest we've seen in a very long time. We're getting a lot of this in the commodity space. So it does seem to suggest we have a combination of some shortened supply problems and also a demand pickup now that Delta COVID wave is going down pretty rapidly. So crude oil trading out the highest since 2014 is a very, very big deal. It's unclear kind of how much that's going to impact the economy in today's world, where crude arguably and gasoline is slightly less of an impact maybe than it used to be, but there certainly are implications of this energy and commodity breakout that is inflationary and needs to still be a part of the risk points you're thinking about in terms of what could strain the economy.
Last question, Oliver. What about Europe? What about Asia? What about those markets? How globally? Obviously, the U.S., maybe not obvious to some, but the U.S. really ahead of a lot of other nations in terms of COVID vaccinations, treatment, all that kind of stuff. But when you look around the globe, anything that stands out to you, can't talk, this week?
Yeah, definitely China, which has been really our focus of the international risk over the last couple months. Those stocks have stabilized a little bit, and we are seeing some kind of potential for a rebound there. Again, a trend in prices that goes back 6 months of declining stock prices in the Chinese market. That is a pretty deep bear market. We need to see more gains here. I mean, something like a 10% rally in China stocks would then perhaps suggest that the worst is over. But we did see some of that strength come back into play this week, and we saw copper breaking out also in a big way, which suggests that global economic strength is building. So it seems that really these months in the summer that were dominated by Delta risk are past us. So what comes next is very unclear. There could still be plenty of issues unraveling in China. We don't really know, but there's certainly a lot of kind of short-term pieces for encouragement this week.
Yeah, well, what comes next? They have to tune in to the TD Ameritrade Network, specifically Morning Trade Live on Monday, to find out what comes next. Oliver Rennick, great to talk to you as always. Thanks for breaking it down, taking a little bit of your time of your busy day for us. Thanks so much, and look forward to having you back on the program again very soon.
Thank you. Yep.
Bye-bye. Well, that wraps up this episode of BRN Sunday. Have a topic of interest, somebody you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for BRN AM. We've got another very special guest. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.